Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome you to our weekly webinar, mapping our week ahead. And I think this webinar will be a little bit unusual. It's the end of the year, so we're just gonna go through things, try to kind of look back what this year's been and what's waiting for us. And a regular scenario, we'll go through regular steps, trying to look into indices, stocks, and so on. So first, I want to introduce myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My overall trading experience is about 24 years. I started as a prop trader in New York City, June of 2000, and I did it for about 11 years. And after that, I moved away from day trading. And something that is my passion, the trading and everything to do with it. So I'm very happy that I have this opportunity to help our traders, customers at AvaTrade. Now, the agenda, as we said, excuse me, we'll go through indices, stocks, commodities, and FX. Risk warning, you can find a full statement at avatrade.com. And of course, everything we do here is purely educational. We do not suggest any trades. Now, social media channels, please feel free to subscribe and follow us on Telegram, X, and YouTube. YouTube is my favorite. You have a lot of information there, including tutorials and all kind of different educational material, including the webinars. Some of you will be watching this on YouTube, so please don't forget to subscribe if you haven't done it yet. Click on that bell so you'll be notified. And of course, feel free to share it with people that might benefit from this. Before we go to the slides that I prepared, just a few words of reflecting. It's been quite a year. It's been super positive for the equity markets. It was a year strong for AIs until recent, right? We see some reactions to the downside. It's a year of elections, so November 5th elections with the victory of Trump give a strong boost to the markets, to the equity markets, also to the crypto markets. The cryptocurrency reacted in a positive way. So we had a nice run since November there. Now we are approaching the New Year's. Usually you would see something that called the Santa Claus rally or Santa rally. And a lot of analysts said that it already happened. It was a Trump rally with the victory over the elections. So it's going to be an interesting year, definitely. On the 20th of January, President Trump, it's inauguration. He comes into power. He starts implementing new policies and I guess reshuffling some positions in the government. So it's going to be interesting how the new policies are triggering what's happening in the market. Also, it's going to be a lot of tariff changes, especially with China, also Mexico, Canada, also possible European Union. So we're going to see a lot of actions, and it's good for traders. We are looking to have volatility. We are looking to have moves on the market, so we can look for opportunities and capitalize on that. So Santa Claus rally is here, but can the stock market avoid the Grinch pinch? So it's an article. I mean, everybody's trying to be smart, trying to analyze what we have. We have a few days actually till the end of the year. We had S&Ps actually down for the month. This article talks a little bit about the Santa Claus deserted the market. It's still been a good year for stocks. This is a picture of a stressed broker managing things. So just to explain, especially for people that are new, what's the whole idea of Santa Rally? You know, as I said, I was part of Wall Street for about 11 years, and I know that all the bankers and financial world and everybody else, they are trying to close the year on the highs so everybody can get nice bonuses. So they say the January or the beginning of the year is usually a good year for real estate brokers and expensive car dealers, as all those traders, brokers, bankers are waiting for their bonuses and they're looking to spend it on luxuries. That's how it's been always on Wall Street, and that's what they're trying to do, always trying to close the year on the highs. So let's see how we do. We have a few more days. We have a few more events, and a lot of people are already celebrating. As you could see, the volume has been drying up a little bit. Few stocks, also Tesla, they had some recalls. We'll take a look at the stock. It's been selling a little bit. There's a nice article here on Apple. Apple's been uncommonly strong run, so a tough January could now be in cards. And explain here, history shows that after 5 week streak of 2% plus gains, the stock usually drop over the next months by roughly 5%. I mean, that's a prediction. Doesn't mean it will happen or it won't happen. So that's on Apple now. Next meeting of the Fed, the announcement comes on 29th of January. This went up a little bit. As you know, the market sold after the recent comments that we're going to have less rate cuts the upcoming year. Instead of 4, we might have 2. Some say none. So a few days ago, this was at 8%. As you could see, in 1 week. The probability of actually another cut was 8.6%. Now we went up by 2%, 10.7%. And still, the majority of calls here, that's no change. Okay, let's go through economic calendar really quick. I take only high impact events, but as you could see, there are only few. So I added also the mid impact. This is something that's important, especially for new people. I just want to share a few things. It's a public information. You can find it on our web trader or the app. Also, you can just Google it and you could see what's happening. The times here, I have the GMT, and these are the things. We have CPI numbers on Monday from, I think Spain would be. Chicago Purchasing Managers Index, pending home sales. Usually we don't show this because these are not the high impact, but now I just included it to have more. As you could see, only 1, 2, 3, 4 high impact events. China, important manufacturing PMI, attentions of China as it's been struggling economically. The economy there has been injured a lot by COVID and shutdowns and everything else, so they're trying to rebuild it. House price index from US on Tuesday. Thursday, we have another PMI from China, manufacturing PMI from Italy. I think this is Spain also. Germany, manufacturing PMI as well. Initial jobless claims from US. Manufacturing PMI from Canada. Friday, employment data from Germany, each of one of the Feds, and manufacturing employment index, manufacturing PMI. So these are the things. Again, as you could see, it's very dry for this upcoming week. Some people are already in the holiday mood, definitely since Christmas and everything else. A lot of people are traveling. Things are slowing down. Of course, the 1st of January, the markets are going to be closed. Please check the holiday schedule on our website so you know exactly the hours and everything else so you wouldn't get confused. Now, 10-year yield, super strong, as you could see here. We've been running up, helping the dollar strength and putting pressure on gold a little bit. We are facing a strong resistance right at the current levels. As you could see here, Thursday we tried to break through it and reversed, and Friday we closed at the highs but below this resistant level here. So we'll see what happens there. These are the gainers and the losers for the week. On the left, the commodities. So natural gas went up 315. Wheat up 272, crude oil 115. These are the percentage gains on the past week. Cocoa had a nice drop of 17%. We spoke about cocoa many times. We'll take a look at the charts when we get there. I just want to show you the numbers. Platinum lost 3.39%, and coffee down 1%. On the Forex, they're not major losses as far as a high percentage, but on the gain side here, pound yen almost 1%. Same thing with dollar Swiss and dollar yen. So we'll take a look at the currencies when we get to that point. Okay, so let's bring the chart. Let's just go through the markets really quick. Again, it's going to be an unusual week if you compare it with regular weeks. It's a holiday, it's a short week. The volume is low. We had a nice run since November. So let's just go through the instruments and see what's happening currently there. China, as we said, again, for new people, I repeat it every session that we have here, but it's important to know. So the government started some implementation of easing policy and other things. So we had a nice run. And then in October, in 2 days, we raised half of it exactly. Since then, excuse me, since then, we've been zigzagging. I had a few attempts to break through it, came right back the very next day. So we're pretty much in the flat line here on Chinese index. US indices, as we know, this was the reaction to the Fed's changing their projection on the interest cut. This was the decision of interest rate on the 18th of December. We had a huge drop. We had a nice recovery, almost fully recovered, maybe 80%. And then Friday was a sell-off, so that left us for the week. As you could see here, we did touch the 50-day moving average. So far, we're holding above the all three averages. Nasdaq, same idea. Friday sell-off came in, Dow Jones as well. Russell's been weak. We spoke about it, I think, last session. It's the weakest out of the indices. The small cap had a nice run and then also strong reaction to the downside. Germany, after making recent highs, we had a nice sliding to the downside. And Friday, actually, the German index went up, unlike the US indices, so something important to pay attention to on the relative strength. UK index, it's been a sell-off here. And French index also has been weak with all the political issues there. We are trading below all three moving averages here. So that's as far as indices. Let's run to the stocks. Again, most of the stocks, especially the Magnificent Seven, they had a great year, nice gains. And lately we'll see some correction there. And of course, we will be watching what's happening, or what will be happening with the major stocks in the beginning of the year. So Apple, actually, as we said on the slide, has been super strong. It's been bucking the trend, so it didn't really sell off hard on the 18th, as we see here, of December. And since then, we made all-time high, and Friday went down with all the market. Tesla, they just had another recall. Stock reacted in a negative way, but it also reacted due to the market sell-off as well. So Tesla has been super, super strong, especially since Elon Musk is involved with elections, and also he's going to have, I don't know if it's official, unofficial position in the government. And the stock's been super, super strong. Netflix has been holding at these levels here. Meta, recent correction to the downside after the highs. Google, as you could see, it suffered a little bit with all the attempts, not the attempts, but the idea of the U.S. government to break the company. And lately, it's been strong. It broke through the previous resistance here of July, and we've been sitting pretty much on that level. Amazon, again, after making all-time highs, we've been trading in this channel between 220 and 230. Microsoft is probably the weakest of the major ones, and I think the whole weakness started when they kind of separate themselves from the AI. I think this was the drop here. Since then, we've been zigzagging slowly to the upside, but we never confirm or reestablish the new high as we did in the other major stocks. So it's weak. Intel, been a rough year for Intel. Recently, we came also to $19 area. If you remember, somewhere here we spoke about it. This is close to the book value of the company. So again, the buyers came in and they bought this level here. We moved to the upside. Uber, since that spike on the 1010, I remember the 1010, that was the show of Tesla for robotaxi, which wasn't so successful, and that gave boost to Uber. And since then, we've been sliding with few strong sell-offs here. We've been sitting here around $60 since the recent drop. Boeing, I think I mentioned it last time. We came to the important level of the resistance here. As you could see here, a lot of attempts to break through, and they are failing. We're sitting around the level of August 19th, exactly around that level. So let's see if it managed to move. Boeing also had a rough year with all the technical issues. This recent recovery from the mid-November helped it a little bit. Let's see if we manage to break through that level, the current level. Now, oil stocks, with the oil suffering a lot. I mean, you could say it's suffering probably, mostly with China, low demand. ExxonMobil has been on the downtrend for a while. By the way, take a look what just triggered something they called dead cross when the 50-day moving average breaks below. Some analysts consider it a sell signal. Chevron as well. So the oil stock's been weak due to the weakness of oil. So that's as far as the equities. Let's just bring another one really briefly. Also, we forgot about the banks, very, very important. Banks had a nice boost to the upside with Trump's election. Recently, they've been selling, and in the past week, we tried to correct to the upside, as you could see here. Nice correction on banks this past week. Just looking for Teva Pharmaceutical. Been a nice run for Teva. You know, if you've been here for a few months, we've been talking about Teva between 7-11, then 14, then 20. This boost is very strong. We opened with a huge gap the previous week on the good news of some medication, and in general financial situation of Teva has been improving. So the share price has been reflecting that. Okay, let's move to commodities, and we'll go through the winners and losers that I share with you on this slide. We start with natural gas. Natural gas is trading at 340. Been up for the week. Wheat trying to come out, as you could see here. We did retest the previous resistance here. The last 2 days we've been in green. For the week, wheat was up 2.7%. Crude oil actually had a positive week, looks like it. It is trading around 70. And again, on crude oil, as we said, the weakness of China is not helping to boost the demand, but it is holding. Maybe there's some concern, definitely, since all the wars in the region, in the Middle East, a lot of things is happening. So the concern about supply, I guess, is still there. So it's kind of balancing the lack of demand, especially from China. So we've been really trading in this tight $5 channel, you could say, between 66 and 71, zigzagging up and down. So that's on crude oil. Cocoa, after having a robust few weeks, it's been weak, strong sell-off here, especially Thursday and Friday. And we did close below the previous level here with this spike on the weekly chart, the high 10,295, we are trading below. So again, all this move on cocoa has been super strong, and it has to do with the physical shortage in the West Africa, especially Ivory Coast, that caused cocoa to move all the way to almost 12,000. There we had a nice correction, a lot of accumulation here with the attempt to break through 7,000. We failed, and since then, this new upside move started on the 10th of November, and it went straight for 6 weeks, 1, 2, 3, 4, 5, 6 weeks, ending up at the all-time high, hitting the all-time high of 12,909. And this past week, there was a deep sell-off the last 2 days of the week. But that's on cocoa. Platinum also had a sell-off Friday. We're holding the current levels here around 918. And coffee has been strong. We spoke about it a few times. It had a correction for the past week, but it's still holding very nicely. All this upside move. Take a quick look at gold. As we said, with the 10-year yields, it's pushing the gold lower a little bit, but gold is really not giving up. As you could see here, the support around 2,600. It's been holding. This large candle on the 25th of November hit that level again with the low of 2605. Then we came, retest the top of the candle, 2720. And recently we retested the 2600 again, briefly diving below. The low here was 2583 on the 18th of November. Since then, we're back in the channel. So this channel of about 115 points, it's been in play for a while. And copper, the last one we'll take a look at. It has the pressure of China, as you could see here. It's trades similar with the China market, as Chinese economy is reflecting on copper, as they're using a lot of it for construction and other needs. So that's commodities. Let's move to Forex really quick. We'll start with dollar index. Dollar index has been super strong, as we said, with the 10-year yields moving higher. It's causing, I don't know if that's alone, but it is supporting the dollar. As you could see here, we've been holding very strongly. The initial move here happened on the 22nd of November. We hit the high of 108.05. You know what? Let's mark that level here. $108.05, and as of now, remains a resistance for us. Been a strong level, and let's see what the upcoming week and also year will bring us. So that's US dollar. On the majors, we'll go through the ones that were the main gainers. Pound yen had a strong week, up 1%. We're facing a resistance at the current levels, clearly. Dollar Swiss as well. It's been super strong here, facing the resistance at the current levels. And dollar yen as well. You could see we do try to break through, but we still have a hard time breaking the level, the current level, and that comes from July 22nd when the sell-off started around that time, and we are that brings us to Japanese yen. So as you could see here, even with the all strength of a dollar, we're not managing to break through that level. And if you go through all other currencies against the yen, they also face strong resistance at current levels across the board. Again, we spoke about it a few times. Less meeting, the Bank of Japan haven't done anything in changing the interest rate. That was disappointing in the end. Sold, but still some investors and analysts are predicting that Bank of Japan will have to do something to deal with the inflation. So soon we might, again, sooner or later, let's put it that way, we might see that action of Bank of Japan. Also, they are famous for doing things unscheduled. So we might see some surprising moves of Bank of Japan as well. So as you could see, the yen across the board is sitting on these current levels, showing resistance here, or if you speak about the yen, support and not willingness to move lower the current levels. Now, Canadian pairs, with the weakness of the recent weakness of oil, Canadian dollar has been weak, reflecting that. So let's see how that will play in the upcoming week, and you can say year as well. South African ZAR, dollar's been strong, and it's been moving strongly against the ZAR, South African rand. We did have a correction here on Friday. We did have a very strong move to the upside. Okay, so let's take a quick look at Bitcoin. As we all know, a lot of rush was around 100,000. We did break through it. We went almost to 109, came back, broke the 100 to the downside, and currently, as we speak, Bitcoin is trading around 95,000. XRP, Ripple, has been showing a lot of strength here after making this recent move that triggered on November's elections, as we know. It's been actually holding above $2. A lot of attention to it, as you know, and they came up with a few coins, and there's some changes, and a lot of analysts are speaking positively about Ripple. Okay, so Bitcoin again below 100. Let's see what we have. It's very important. There are going to be some changes. As you know, President Trump is pro-crypto, and that's the main reason why the cryptocurrencies ran after the elections. So let's see how that will develop in the upcoming year. Okay, so let's just summarize what we spoke about. We're facing a short trading week, the end of the year, holidays, festivities, people are traveling, volume is low. At the same time, traditionally, market is running up to close the year at the highs. Let's see if we see that this upcoming week or not. People are preparing for the celebration, and we're kicking in the new year. We're still with the old government in the US until the 20th of January. And starting the 20th of January, President Trump comes into power. And I mentioned to my team last week, I just want to share it with you. In the US, it's very important. There's something they call the first 100 days. So the presidents are being kind of judged or measured on their actions within the first 100 years. I almost said it, yeah, 100 days. So let's say January 20th, you had 3 months. So on April 20th, somewhere in mid-April, we'll see a lot of publicity, what Trump did, what he didn't do, and so on. So it's going to be an interesting year. Definitely changes, definitely a lot of excitement, a lot of volatility. It's something that we need as traders. So I want to wish everyone a happy and healthy new year to you and your families, a successful one. And as funny as it is, we'll be back next year. So next Sunday, we'll be already in the new year, and we'll speak about the market then. All the best. Take care.